All right, let's talk about Russia's economy. Because by all accounts, it should be in serious trouble, right? It's facing some of the most intense sanctions in modern history. And yet, if you look at the official numbers, they're telling this story of, well, incredible growth. So what's the real story here? Is this some kind of economic miracle, or is something else going on entirely? Let's dig in. So here it is. This is the number at the heart of the whole mystery, 4.3%. That's the Kremlin's official GDP growth forecast for 2024. Now, to put that into perspective, most Western economies would be absolutely thrilled with a number like that. For a country under this kind of immense pressure, it seems almost impossible. And that's the core question we are going to unpack today. How on earth is this possible? Is this real, sustainable growth? Or is that shiny 4.3% figure hiding a reality that's a lot more fragile, a lot more distorted than it looks? Okay, so the main engine driving all this growth, well, it has a name. It's called military Keynesianism. And it's really important to understand that this isn't your normal, everyday economic activity. We're talking about a completely different kind of beast. Think of it like this. The government is basically opening up a fire hose of cash. We're talking over 10% of the entire country's economic output and pointing it straight at the war machine. That money goes to defense factories, it goes into soldiers' salaries, and then those soldiers spend that money in the regular economy, which, you guessed it, juices the GDP numbers. It's a massive state-funded sugar rush. But like any sugar rush, you know a crash is coming. And what you end up with is something analysts are calling a two-speed economy, which this slide shows perfectly. On one side, you have the military sectors, the rocket, just blasting off, growing at an insane rate, over 30%. But then you have the civilian economy, the tractor, the part that actually makes things for everyday life. And that side is either completely stuck in the mud or, in some cases, even rolling backward. This isn't healthy, balanced growth. It's a completely lopsided boom, built for one thing and one thing only: war. But here's the thing. When you run an engine this hot for this long, the whole system starts to crack under the pressure. And those cracks are now showing up right at the very heart of Russia's economic decision-making. This quote from an analyst just nails it. It perfectly captures this massive internal conflict. You've got the Russian government basically at war with itself, with two of its most powerful institutions pulling in completely opposite directions. And this visual lays that contradiction bare. On one side, you have the Kremlin, just slamming its foot on the accelerator, pumping an endless stream of money into the war effort. But on the other side, you've got Russia's central bank, desperately yanking on the emergency brake, trying to fight the massive inflation all that spending is causing. And who's caught in the middle of this giant tug of war? The regular civilian economy. To fight that inflation, the central bank has been forced to jack up its main interest rate to a staggering 21%. I mean, just imagine, you own a normal business, a cafe, a small factory, anything. You simply cannot get a loan at that rate. It's impossible. So while the big defense companies are getting special, subsidized loans, everybody else in the civilian economy is being completely starved of the cash they need just to survive, let alone grow. And on top of that credit crunch, you have a historic labor crisis. I mean, it's a perfect storm. You have hundreds of thousands of men mobilized and sent to the front. You have millions more being sucked into defense factories working around the clock. You've got a huge exodus of skilled, educated workers who have fled the country. And all of this is piled on top of a demographic decline that was already a huge problem for Russia. The final result is this mind-boggling deficit. An estimated 2.7 million workers are just missing from the economy. And that's not just some statistic. It's a hard cap on what the economy can actually produce. It's forcing businesses into this desperate bidding war for the few workers who are left, which drives up wages without creating any new value and just pours more fuel on that inflationary fire we talked about. And speaking of inflation, the official government number is hovering around 9.5%. But, that is not the reality for Russian families at the grocery store. As this chart shows, when you survey people, they feel like inflation is way higher, closer to 16%. And frankly, when the price of a basic staple like potatoes jumps 81% in a single year, you can understand why. So, being cut off from its old markets in Europe, Russia has made a very big, very public pivot to China. But when you actually start to look at the trade data, it becomes crystal clear that this is not a partnership of equals, not even close. This chart basically tells you the whole story. For China, trade with Russia is just a tiny slice of its massive global pie, somewhere around 3 to 5%. It's almost a rounding error. But for Russia, China has become an absolute economic lifeline. And that dynamic creates a massive power imbalance, with all the leverage on Beijing's side. This table here really clarifies that fundamental shift. Before the war, Russia had a more or less balanced, interdependent relationship with Europe. It was selling high-value energy and buying high-tech German cars and machines in return. Now, it has what economists call an asymmetrical dependency on China. It's selling its raw materials, like oil and gas, at a huge discount, and in return, it's just importing Chinese finished goods like cars and smartphones to fill its empty shelves. And you can literally see this on the streets of Moscow. I mean, look at this. In 2021, Chinese cars were a tiny fraction of the market. Today, they are completely dominant, over 60%. This isn't some kind of strategic partnership. It's a market takeover, and it's happening at the direct expense of what was left of Russia's own domestic auto industry. So if the present is this strange paradox fueled by war spending, what does the future actually look like? Well, once that sugar rush finally wears off, the consensus among economists is pretty clear: a long, painful hangover of stagnation. The forecasts are pretty stark. After this year's artificial boom, growth is expected to just collapse, down to around 1%, maybe even less. The military stimulus simply can't last forever. And when it finally fades, all those underlying structural problems we've been talking about, the worker shortages, the sky-high interest rates, the isolation from Western tech, they're all still going to be there. And this leads to what is maybe the biggest long-term challenge of all, something called the conversion trap. The question is this: after the war ends, what in the world do you do with all these massive factories that have been retooled to make nothing but tanks and missiles? Can a tank factory just start building tractors? Well, history tells us it's not nearly that simple. This quote about the fall of the Soviet Union is just so relevant today. You can't just efficiently build refrigerators in a factory that was designed from the ground up to make hyper-specialized missile parts. The skills of the workers, the equipment, the supply chains, all of it is geared for war. And converting that entire industrial base back to making stuff that people actually want to buy is a monumental, if not impossible task. So this all points to a consensus view of Russia's future, a long period of what's being called managed stagnation. That means an economy that doesn't completely collapse, but one that can't really grow either. It's a future that seems trapped by high inflation, technological isolation, and a slow, grinding decline in the standard of living for ordinary people. Which brings us right back to our central question, but with a whole new perspective. The war economy has, clearly, worked in the short term. It's allowed Russia to fund its military and withstand the pressure from sanctions. But has it done so by trading away its entire long-term future? Has it sacrificed genuine development and real prosperity, all for the sake of this conflict? That's the trade-off that is going to define Russia for a generation to come. Thanks for tuning in.